What's up, YouTube? Stocks by the numbers. Hope everyone's doing well. Let's get into it. Name of the company today, SoundHound AI. Ticker symbol SOUN, listed here on the NASDAQ. Now, this company is involved in the voice technology software industry, and they're looking to get into the AI sector, the artificial intelligence sector, supposedly going to be roughly a $2 trillion industry. Right now, the company is using its voice assistant software in automobiles with clients like Mercedes-Benz and Honda. They're estimating moving forward that roughly 90% of all new vehicles will supposedly be utilizing this voice assistant software. The company says they have about 300 million in backlogs, so not necessarily going to explode off of that news because the company is bleeding. However, it does show us that the company will most likely not crater to pennies and sub $1 even, in my opinion, because they do have that business and revenue coming in moving forward. But let's look at some of the numbers. So right now, stocks at $2.30, down 30 cents on the day, about 11.33%. We're near the lows of the day. We have a market cap of about 92 million. The company's losing 39 cents a share. We look here at the EPS side. The company came in. What's going on here? The company came in at the same numbers. So, they're looking all right on the EPS side for the last couple of quarters, and as you see here, the revenue is actually starting to come in for this company now, going from no business to 6 million in revenue in Q2 of 22, up to 11 million in Q3 of 22. So the company is beginning to rock and roll here. As you can see, analysts north of a $4 price target here on the company. But let's check some of the numbers out. Okay, so if we switch over here, if we look at the statements, you can see that the assets have actually been dwindling down to sub 64 million, while liabilities exploded, going from a couple of 100,000 to roughly 80 million right now. So the company is trying to figure out exactly what the heck is going on and what they're doing, sitting with about $50 million in debt, and apparently a book value as of last quarter of negative 7 cents. But that's really not what we need to look at here. If we switch over here to the income statement, you can see again, revenue began to climb. Cost of goods about 2.5 million. So that's what, maybe like 20-25%. Not too bad. Look at the operating expenses though. Minus 35 million off of that 11 million, right? So this is what I mean. This is why we say in the beginning, it's hard to determine what direction these companies are going to move in, right? Because if they can kind of cap these operating expenses, which it doesn't look like they can, but let's just say hypothetically they can, and it doesn't go north of 60-70 million. This is why they have to consistently increase their revenue quarter over quarter, year over year. Because if they can slowly chip away at these negatives, and it's not only immediately go positive, but also Wall Street wants to see these companies begin to narrow these losses as business gets better. So this company, in my opinion, definitely has that potential. But, the last thing they want to see is when revenue doubles or triples, but losses go down with it, right? Because technically, really shouldn't make any sense. The more money you make, the more money you should have left over. So, looking at some of these numbers here, it does look a little rough for this company moving forward. However, they are supposedly forecasting big things. If we switch over here to some of the statistics, you can see the company's trading 29 times sales. Book is negative, so technically there's no price to book ratio. The company is losing money per share, so there is no PE. And coming down here, the return on assets, as you can see, decreasing, going from minus 28.5%, now sitting at about minus 61%. The return on equity has more than doubled down from minus 46% to minus 101%. Return on invested capital, same situation, decreasing severely. The gross margin has increased, going from 59.5% up to about 77%. Operating margin percentage has basically been cut in half, heading in the right direction from minus 470%, now sitting at minus 240%. Same story for the EBITDA, of course, earnings before interest, taxes, depreciation, amortization. Earnings, revenue has increased, so something like an EBITDA margin or a net margin, as we can see, will increase along with the new revenue coming in. So EBITDA was minus 450+%, now minus 227%. Net margin minus 500%, half that, now sitting at minus 258%. So again, right now, this is like the company in its infancy. So it's going to be very difficult to just say, oh, it's going higher, it's going lower. However, if we look at some of the forecasts, we can see estimates for 22 minus $1.39 a share for the year. The company came in only minus 73 cents. So yeah, in my eyes, that is phenomenal. And now you switch over here to 23, analysts are estimating minus 29 cents. So if they keep this trend going, hypothetically, let's just say they finish this year and they come in, like minus 10 cents a share. That is going to be astronomical. The fact that this company not only is narrowing losses faster than analysts expect, but more importantly, having the potential to go net income positive while analysts were still expecting them to be net income negative by 2024, let's say hypothetically, that is going to send the stock to the moon. So again, you have a $90 million market cap, and yes, they're not really bringing in that much revenue to justify it right now. However, again, $300 million in backlogs, and as we can see, by 2025, analysts are estimating that this company is going to earn close to 50 cents a share, with revenue jumping, look at this, $46 million for this year in 23. I believe they were estimating anywhere from like 43 to 50 million for 23, so that's right in line with their guidance. And then you look at 24 and you have over 100% jump in revenue, jumping to 95 million. And then by 2025, look at that jump from 95 million to $635 million for the year of 2025. So that's why this is something that you may want to keep on your watch list. This is something that you may want to incorporate for the long-term, semi-speculative roll of the dice portfolio here. Because yes, at 226, as we see, it is trending downward. There's a 1-month chart. These are the earnings coming out. As you can see, slight beat here coming in 9.5 million over 8.8 million, and a slight beat on the EPS side as well. So this is what I mean. The company is beginning to rock and roll. However, at the current valuation, it may be a little high. So dropping down another 10-20%, not only is it justified, but it should be welcomed, by anyone watching the video. Because of course, why would we force our way in at 226? Let's say we could buy it at 176, right? So again, all about pricing and timing. That's why we don't really force ourselves in here to these stocks. This is a 1-year chart. If we back up to inception, you can see nothing really definitive. Obviously, the company had big volume come in back in February and has since been pulling back and just broke down from this fib here of 257. And of course, that moving average that it was above since the 3rd week of January. But basically what we're seeing here, this high line and this low trend line here, this is basically like a big trumpet almost. And if you look up your technical patterns, then you will see that a trumpet basically means that traders and investors are uncertain as to whether the stock should be up, down, or sideways. That's what this means. So the trumpet usually is a pattern that is not definitive, knowing whether it's going to be bullish or whether it's going to be bearish. Now the bottom of this line, as we see, let's just say it pulls down immediately. You're looking at 70 cents. I really don't think it is going to go that low. You have a lot of looking like resistance and support right around here at like the mid 150 range. That, in my opinion, may be the low. Now, of course, we're talking 70 cents off a stock that's 2.25, so that's like a 33% drop right there. So, it can definitely get worse before it gets better. However, even something like this in the short term, pulling back to a fib here of 187, right here it's at, again, a little bit of a, let me see, can I get a circle? Where are the circles? It's a circle. As you see here, we are right in this. You have a resistance support level right here, 226, where it's currently sitting at, just about, where it touched this level again, and it broke through and rejected and pulled back after hitting that level initially. So again, over here, we'll draw another little circle for you. Boom. And you can see that it hits this level multiple times. So this is going to be where it tells us where it's going to go. Now again, based on future forecasts, it does have the ability to, bounce off this 220 level and climb back up into the threes. Definitely has that potential. However, again, me personally, I wouldn't force it. I like the story of this company, where it could go, where it could end up, and it may be a great company to start accumulating shares to tuck into the long-term portfolio. However, I do feel that it will most likely continue to sell off, and it will pull back to sub $2. However, sub $2, I would be a buy. Right? That's just me in my opinion, because it does sound interesting. And if they really do begin to implement their software into, the bulk of automobiles moving forward, and I know that a lot of these big tech companies are beginning to develop these AIs. So if it does become, a massive $1 trillion+ sector, then yeah, a company like this, SoundHound AI, may really benefit and may really pay off. And again, you may want to keep an eye on this and consider throwing it into your portfolio, or definitely at least on the watch list, in my opinion, right here. But we look here at the daily, and you can see the company just broke the 50-day moving average, sitting here at 238 on the daily. The stock right now is it's 226. I'll update this. 226, right? So it broke this average. So if it closes here below 238, which it looks like it most likely will, then in my opinion, it will probably continue this downward trend. And again, right here, coming in at about like the 175, that 180 mark, that's probably where I would be a buyer. The 200-day moving average has been established here on the daily, sitting at 292, which isn't too bad. Again, the company inside of the next month or two, going into next quarter's earnings, may probably have the ability to rally back up into the high twos, potentially even the low threes. But only time will tell. MACD slowly pulling back and selling off. But again, the stock was absolutely raging with high volume, coming in spiking to almost $5 here just in the last couple of weeks. So the sell-off, the pullback is understandable, is justified. Look at the RSI, absolutely exploded. So now it's sitting here at like 41.25. Could definitely come down slowly and continue to sell off over the next week or two, at least in my opinion. Here on the weekly, again, company hasn't been around too long. Bollinger Bands are now established. As you can see, we had closes right at the top of this top Bollinger Band here for a couple of weeks in a row. And then, of course, we rejected, and we are now pulling back. The mid-Bollinger Band here on the weekly is 209, which will most likely be the next stop. And if this company slowly sells off for the next week or two, you may see the MACD preparing to come down and cross here, which, of course, will lead to an even greater sell-off. That's why I'm saying it's a good idea. They're starting to do revenue, and it's probably worth owning and taking a shot here on this one. Just not at this price, right? That's what I always say. Pricing and timing. Why force ourselves in here when we can get a better price? And then down the road, years from now, you turn around, if this is, 10, 12, 17.60 a share or something, you're going to be that much happier, right? Because your cost basis was $1.70 instead of $2.20. But, overall, again, do like the company. Very interesting space. And we could have something good here, but let's take what the market gives us. No need to buy it here at 226, but keep an eye on this one. It does sound very interesting. But I'm going to leave it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. If you like the video, give it a thumbs up. Helps out the algorithm. Helps me get a few more eyes on the channel. If you appreciate the content, please push the subscribe button. Means a lot to me, watching the community grow here day by day. But moving forward, like I always say, I understand markets are rocky, they're volatile, they're uncertain. We were slightly, green and then flat, and now you can see Dow is down roughly 300 points, and all indices are down roughly 1% across the board. So, it can turn on a dime. And that's why I even said earlier in my Discord, which of course is in the description if you guys want to come in, BS a little bit. But I said in the description earlier, if you go long on a stock and you wake up and the markets are up a little bit and you happen to be green, even if it's just a few dollars, it may be in your best interest in this environment to take profits because you never know what can happen. But again, I wish you all the best. I want to thank everyone for stopping by. I appreciate your time. I wish you well moving forward. Have a good day, guys.